everyone, welcome back to my channel. It's Jasmine. For those who are new, I'm a casual reseller on the US and Canadian Poshmark app as well as eBay. Today's video will all be about tax. Now, I do have to say that I'm in no means a financial advisor or an accountant, but I did talk to a few of my accounting friends as well as did some research online, and this is the information that I found out and I will share with you today. If you like reselling content like this, be sure to give this video a thumbs up and hit that subscribe button. So the first announcement that I want to make is that Poshmark and other sites like eBay, if you do sell on eBay US or Poshmark US, you will receive a 1099 form next year if you sell more than $600. Prior to this coming year, you had to make over 20K as well as made 200 transactions. So this is quite a big difference. Now, how does this affect a Canadian seller? Well, what I found out is that a 1099 form is equivalent to a T4 form that we as Canadians would receive from our employment, and basically just tells you how much you sold on the platform. Now, there was a recent update on Poshmark US where you do have to input your tax information, and this number was your tax ID number or your SSN number for US citizens. Now, being Canadian, that obviously implements a problem because personally I don't have a US SSN number or a tax number, so how will I continue selling on Poshmark US? One option would be to stop selling on that platform after meeting the threshold of $600, but I do make maybe 80% of my sales on Poshmark US or on eBay US, so I really don't want to take away that source of income from my selling business. So an option to bypassing getting those two numbers is actually getting an EIN number instead. This stands for Employment Identification Number. Now, just because you apply for one of these numbers doesn't mean that you have to do your taxes to the States as well. So being a Canadian citizen, we can just get this number to, identify that we are actually applying for this number outside of the US, and we will actually be filing our taxes in Canada. So in order to apply for one of these numbers, you basically just have to call the IRS, which is, the tax service in the States, and I'll leave the number down here. And basically, you just give them a call. I believe the options for the phone call is 1 and then 1 again. And then you just tell them your situation. So I basically just said that I am a Canadian and I do e-commerce and I would like to apply for a number. After the process is done, I do have to warn you, it does take roughly an hour, and it did take me a really long time to actually get through to the line. If there are too many people on hold at one time, the line just says that you have to call back later. But if you are able to go on hold, then it said that it would take between 15 to 30 minutes for me to be able to speak to somebody, but it actually took me an hour until I was able to speak to someone. Once I was able to talk to the individual, it was relatively fast in order for me to get an EIN number. I think the process was maybe 15 minutes or so. And if you are wondering on the questions that they ask you, just Google SS4 form, and that way you are prepared for any questions that they have to ask you before receiving your number. At the end of your conversation, you will get the EIN number right away, and then in a few weeks or so, they will also mail it to your mailing address. So some people may ask, what address did I use? Did I use my US address that I used from my third-party shipping company, or did I use my home address? So now, because this is for tax purposes, I did use my home address in Canada, so they will actually mail that to my house address. One more tip that I want to share with you when you are calling the IRS, it is not a toll-free number, so if you don't have North American calling, it might be a little bit expensive if you are roaming from your cell phone. So one thing that I did, because I have no idea how long the phone call would be, I downloaded this app. It's called Viber, and it was free trial for 1 week, so I could do worldwide calling for 1 week, and it basically just uses your internet service in order to make the phone call. So of course you have to sign up. You do have to enter some sort of payment method, such as Google Pay or your credit card, but just make sure that after you're done using the call, just to cancel that subscription, because I was able to call the IRS and I didn't have to pay anything for it. Now, as I mentioned before, you don't have to worry about having to file your taxes to both the US and Canada. You can just take whatever amount your 1099 form says and apply it to your Canadian income tax. what if you are only selling your household items? Do you still have to declare these things? And the answer is yes. Because of the new threshold of $600 and receiving the 1099 form, you do have to declare all your earnings, whether or not be your own household items or if you are purposely buying things to resell them for a profit. So this is just how it's done in the States. I think within Canada, like if you are selling things from your household, you don't really have to declare them because in reality, you are getting things at a loss. So there's nothing really to declare because you're just making some money back that you had originally spent. But because of these changes to the US tax system, we do have to also apply it to our Canadian tax forms. Now I'm going to talk about how you can lower the income that you're declaring through these forms. The number one way that you are able to do this is, of course, the deductions. Now, deductions are what you can subtract from your profitable income in order to lower that income that you will be taxed on. There are two different methods that you can do in order to include your deductions for the inventory that you're bringing in. Number one, you can deduct when you purchased the item rather than when you had sold the item, and this is known as the cash method. Or number two, you can do the accrual method, which means that you only deduct when you have sold the item. So depending on which method you want to do, just make sure that it's consistent so that you don't double deduct those items. The second thing I want to mention is, of course, mileage. Now, I recently downloaded this app. It's called Driver's Note, and it basically records the mileage that you want to take when you are traveling, let's say, to the thrift store to get some inventory, or the post office when you're shipping your packages. You want to make sure that you record all the kilometers that you are using on your vehicle, and you do get some sort of reimbursement for the kilometers. I think it's maybe like 50, 60 cents per kilometer, but of course it does add up, and you can also include that in your deductions. The next question that I want to answer is whether or not you should include personal items in your inventory track record. And the answer is yes. Because, as I mentioned before, it's very likely that your personal items you are selling at a loss. That loss value will deduct the income that you are receiving and, of course, lower the amount that you will be taxed on because of your business. Another point that I want to mention is that what if you sold an item that you had bought years ago, you don't have the exact receipt for it, and you can't prove how much you had purchased it way back when? Well, you can kind of estimate what the cost was. You can kind of Google and search for similar items so you can kind of get an idea of how much you had purchased the item for. As long as you can kind of show how you came up with that number and what that market value is, I don't really think they'll care if, you said that you bought it for $20 and it was actually $30. So if you don't have the receipt, you don't have to totally sweat over it. Just try to keep as many receipts as you can whenever you're outsourcing. And that brings me to my next point, is that always keep your receipts. So whenever you're going to the thrift store, always keep those receipts. And I personally made a few changes to my inventory track sheet. I did make a video on how to do a basic one, but some other points that I want to add are the date that I went to the store, what the store name was, and the ID number of the item that I had purchased. That way I can go back to the receipt and I can find the exact value and make sure that it matches what I wrote in my inventory sheet. You also want to keep all record of your shipping expenses as well as your gas expenses, because gas is really expensive right now. If you keep track of all your gas purchases for the entire year, you can go back and see how many kilometers you had used using the app that I had used, or any other kind of driving app, and you can kind of find the percentage of what you spent on the gas based on the mileage that you had used. And the last category that I want to review is how to deduct expenses from working within your home. Now, you can do this if, number one, your home is the principal place of where your business is taking place, and whether or not you use that space solely for the business alone. If you just use like a shared space, so let's say part of my bedroom is where I, ship my packages. Or let's say like in my basement, that's where my inventory is held and it's solely for my inventory. You can kind of estimate the footage of how much your business is taking place within your house compared to the total square footage of your household. Once you have calculated that, you can deduct expenses based on like your heat, your electricity, your interest on your mortgage, and you can take that percentage of your household that you're using for your business and apply that for your, your monthly fees for water, heat, etc., and then use that as a deduction for your business. Now, this is calculated on a reasonable basis. So as I mentioned before, you take the area of workplace divided by the total area of your home. And let's say if you use only part of your home for both your business and personal living, you can calculate how many hours in the day you use it for your business, divided by 24 hours, and multiply that result by the business part of your total income expenses. And that will equal to your household cost, which is your deductible. So some other expenses that you can deduct are, of course, your supplies that you use, such as, your purchases for tape or poly mailers, poly bags, other things that you use for your business. So in conclusion, I just want to give some final tips on what you should do for your business. Of course, is keeping all your receipts. Have a well-documented spreadsheet to track your inventory and your expenses, as well as your potential deductions. Of course, track your mileage and your shipping fees and all the supplies that you're buying for your business. If you have any questions, feel free to leave them in the comments below. I'll try to answer them, but again, I'm not a financial expert and I'm not a CPA, so I'll try to answer them, but I can't make any promises. So again, thanks for watching, and I'll see you in my next one. Bye!